Last week, one of my clients nearly threw away 1 million dirham. Why? Because he was about to buy a property in Dubai that was nearly 25% overpriced. And this wasn't someone beginner who didn't know about Dubai real estate, about the developer. He was confident about the developer. He has done his research. Still, he thought he is getting a good deal. But here is the truth. Dubai 2025 isn't Dubai 2020. The rules have changed. The market has evolved. And what worked 5 years before could cost you a fortune today. Some of my clients were tempted by low prices on the city's outskirts and bought in Livan, Dubai Silicon Oasis, DLRC, and some other odd locations without checking the demand. They soon found out themselves with empty units and plunging rents. This cautionary tale underscores the need for due diligence to navigate Dubai's booming 2025 and beyond. In this video, I'll walk you through 7 essential questions every investor must ask before putting up a single dirham into Dubai real estate, plus the common mistakes that drain people's bank account. The very first question that you should ask: what rental returns can I expect location by location? Dubai's neighborhoods vary widely in yields. In Business Bay, gross rental returns for one bedroom is around 6 to 7%. Dubai Marina yields are similar, 6.1% for one bedroom. Emerging areas can pay even more. For example, Arjan's studio delivers roughly around 8.2%. Even beyond those highly density communities like JLT and JVC offer 7 to 8%. These figures line up with industry reports. Overall apartment yields in Dubai average 7% in 2025 versus 5 to 7% for villas. In practice, smaller units in well-located communities near metro or business hubs, commercials, major infrastructure generally yield more. Always check the latest market reports or property portals like Bayut, Dubizzle, DXB Interact for community-specific ROI figures before buying in Dubai. Then the second question we need to ask: how much money or capital do I need actually to enter in Dubai real estate? Entry costs differ by developer tier and project stage. For example, top-tier developers like Emaar, Damak, Nakheel, Miras, etc. typically price even their smallest units over 1 million dirham. These projects are considered premium by location or brand. However, they often offer very flexible payment plans. Many now allows as little as 10 to 20% down payment initially, with the balance spread across the construction period. Many investors turn to off-plan projects for the lowest entry. For example, Town Square by Nashama has offered off-plan starting with just 10% down payment, and according to market data, first-time off-plan budget in affordable suburbs range from 600,000 to 1.2 million dirham for a studio and one bedroom. But this is not always an ideal investment. If you have got 85 to 10 millions, that's when you start unlocking premium waterfront addresses, canal-facing apartment, and high-end villas. As a rule of thumb, if you are a first-time buyer and are navigating your first investment in Dubai, make sure your first investment with only tier 1 developer like Emaar, Nakheel, Miras, Shoba, Damak. Wait. Despite being the tier 1 developer, consult your broker. Some of their projects might not be suitable for you, and you may end up being stuck in their projects. Then the third question we should ask ourselves: what about the mortgage? See, mortgage terms are more favorable for UAE residents than non-residents. A UAE citizen can usually get up to 80% financing, typically 20% down payment he has to go with. Dubai residents or expats typically max at 75% loan to value or LTV and 25% down payment. It also depends upon the valuation as well. And for foreign buyers or non-residents, bank often cap LTV or loan to value ratio at 50 to 70%, meaning 30 to 50% down payment they have to manage themselves. There is also a price break on properties above 5 million dirham. Foreigners must pay at least 30% down payment. Interest rates are more or less similar for residents and non-residents, but the extra liquidity cushion is key. Documentation and processing times differ too. Lenders will want your passport, visa copy, employment, salary proof, bank statement of 1 year to 2 years. Resident applicants with UAE payroll often get pre-approval in 3 to 5 working days and final loan in 2 to 3 weeks or max 45 days. Non-residents face more scrutiny. Prepared buyers report it takes 2 to 4 weeks to approval, sometimes longer if self-employed. Also, banks now offer more international-friendly products like HSBC's non-residence mortgage but require impeccable paperwork. In short, plan for a bigger down payment and a few extra weeks of paperwork if you are not based in UAE or you are not a resident of UAE. Then the fourth question that we should ask ourselves, how can I leverage Dubai's Golden Visa? Dubai's Golden Visa program is a huge draw for overseas investors. Key threshold, buy at least 2 million worth of property in Dubai. You can combine multiple properties to reach this sum, and off-plan purchases count as well, even if the property is 0% constructed. Holding a qualifying property grants a 10-year renewable residency, a major perk for global buyers. Golden Visa holders can sponsor spouses, children, and parents and enjoy the full legal rights of residency. Remember, the Golden Visa only covers residency. It doesn't waive other costs like DLD fees or broker 2% commission or replace standard foreign ownership rules. Then the fifth question that we should ask, what investor mistake should I avoid? If me being an investor, the first is the poor due diligence is common. Don't be tempted by a low price without checking fundamentals. Many international buyers chase deals in oversupplied districts only to end up with vacant, underperforming assets. Always verify actual rents and occupancy. Developer choice is critical. Opt for established, well-capitalized developer. Top developers like Emaar, Nakheel, Miras, Damak, Shoba have proven delivery records. In contrast, projects by lesser-known builders or developers can risk delays or build quality issues. Check RERA projects approval and escrow account details too. Don't overpay above market value. Always cross-check with recent sale prices. Paying a 10% premium on an apartment or villas can wipe out a year's rental profit or even more. Likewise, investing in a very low yield segments, example premium villas in unproven locations, can squeeze returns. In short, avoid hype without data. Insist on market reports and focus on combination of value and yield. Then the sixth question that we should ask, which infrastructure and trends are driving the growth in a particular location and which areas are flat? Dubai's latest master plans are reshaping neighborhood fortunes. Metro expansions, Expo legacy projects are at the top. For example, the new Blue Line extension with stations in Dubai Creek Harbor Master Community is slated for the completion by 2029. Early buyers will experience prices jump in metro-linked communities. Likewise, the upcoming Creek Tower, Blue Waters development are propelling the Dubai Creek Harbor districts. Mid-2025 data shows Creek Harbor prices are 15% above than 2023 levels. Similarly, Expo 2020s and Dubai South continues to boom. In Q1 of 2025 alone, Dubai recorded 2,676 sales transactions worth roughly around 8.74 billion dirham, reflecting surging demand for affordable off-plan near the new airport and planned metro station. In fact, experts note that villa and prime apartment remains hot, with villa prices up nearly 32% year-on-year in mid-2025. By contrast, some supply-heavy communities have seen flat or modest growth. Oversupplied mid-market areas, example part of Dubai land, have largely stabilized, as we saw, because new inventory absorbed rental demand. Other older neighborhoods like International City or Discovery Gardens are generating decent yields but only moderate capital appreciation. Overall, Dubai's average property price was about 6 to 7% higher in mid-2025 than a year prior, but hotspots often outperform. For instance, Dubai Hills Estate by Emaar, family communities with new projects, and downtown Marina still command premium growth. Palm Jumeirah villas and Business Bay apartments, both with limited new supply and premium appeal, appeal remain strong as well. Looking ahead, keep an eye on 2026 to 27 projects. New malls, hospitals, airports, communities near confirmed metro lines or major highway or infrastructure are likely to keep pacing the market. Meanwhile, don't assume every cheap areas will rise. Always tie infrastructure progress to performance. As we have come down to the last question of this video, bottom line and the next step for you as an investor. Dubai's 2025 market is complex but full of opportunities. By asking these questions and using up-to-date data, you can navigate it with confidence. Remember, know your exit, which is rental versus resale. Then plan your financing and choose projects prudently. Work with licensed agents who provide recent transactional data, historical charts and patterns, and consider legal or mortgage advice before signing a deal. Feel free to reach out to me. I talk with numbers, not emotions. Signing off, your RERA certified broker, Mr. Hashim.